Hi, I'm Marc, and on this channel I talk about Brexit and UK politics. The UK fund sector says it is at risk of losing competitiveness post-Brexit for a number of reasons. And there are a number of reasons. Increased costs and complexity is one. The UK fund sector now has to comply with both UK and EU regulations, which can be costly and complex. And of course, there's reduced access to the EU market. The UK is no longer part of the EU single market, which means that UK fund managers have to apply for individual permissions to market their funds to EU investors. And this can be time-consuming and expensive, and it has made it more difficult for UK funds to compete with EU funds. And there is a loss of talent already. The UK fund sector has lost a number of employees to the EU since Brexit, as some workers have chosen to move to other EU countries where they can continue to work freely. This has made it more difficult for UK fund managers to find and retain qualified staff. And of course, there's increased competition from other global fund centers. Other global fund centers, such as Ireland and Luxembourg, are now more attractive to fund managers than the UK due to their more favorable regulatory regimes and their access to the EU market. And we must not forget New York. But as a result of these factors, the UK fund sector is at risk of losing market share to its EU and global competitors. And this will have a negative impact on the UK economy, as the fund sector is a major employer and contributor to GDP. In addition to this, the UK fund sector has also been impacted by the COVID-19 pandemic and, of course, the war in Ukraine. Those events have led to market volatility and investor uncertainty, which has made it more difficult for fund managers to attract and retain clients in these cases. The UK government is aware of the challenges facing the fund sector and is working to address them. For example, the government has launched a review of the UK's financial services sector, which is expected to make recommendations on how to improve the competitiveness of this whole sector. And the government is also working to negotiate new trade deals with non-EU countries, which could open up new markets for UK fund managers, but they were not very successful so far. However, it's unclear how effective the government's measures will be in addressing the challenges facing the fund sector. The sector is likely to remain under pressure for the foreseeable future, and it is possible that some UK fund managers may choose to relocate to other jurisdictions. Britain must align itself with European Union rules and cut compliance costs to avoid its £8.8 trillion fund sector losing global competitiveness. That is what the Investment Association industry body said on Tuesday. Despite the continuing strength of the industry's international position, there is rising concern across the industry about threats to competitiveness and the potential knock-on effect for the domestic market, as the IA said in its annual survey of asset managers. Assets under management in 2022, a year of war in Ukraine, turmoil in UK pensions and rising interest rates, fell 12% to these £8.8 trillion from £10 trillion in 2021. This was a bigger fall than during the global financial crisis after years of 10% annual growth. While £11 billion flowed into funds that tracked indices, a record £36.6 billion left actively managed retail funds. The most important detractor in sentiment has been the incremental cost and complexity of the UK regulatory environment, the IA said. In the context of the wider pressures in the operating environment, the scale of regulatory change over the past 5 years is a significant concern. It has already led some firms to look differently at the role the UK plays in their global operations. Europeans account for 56% of overseas clients as asset managers run funds in EU centres such as Luxembourg and Dublin, which has so far continued after Brexit. The EU fund regime is an extraordinary export story for the EU, and we should be extremely careful about diverging away from that. We should be as closely aligned as possible, is what one asset manager said in this survey. Britain has begun a wide-ranging reform of its financial rules, including tougher consumer protection to exploit post-Brexit freedom to write its own regulations. They don't want to make that tougher, but they're touching that. Firms point out that there are other jurisdictions, including the US, which provide high consumer protection regulation and a lower regulatory compliance burden that could see the UK's global competitiveness reduced, particularly in a post-Brexit environment where access to the European market is less certain, as the IA said. The UK banking sector has lost access to parts of the EU internal market even after the TCA was negotiated, because the TCA does not include a comprehensive financial services chapter. TCA is the deal with the EU after Brexit. This is because the EU was reluctant to give the UK financial services firms the same level of access to the single market as they had before Brexit. Why should they? The EU is concerned that the UK financial services sector is no longer subject to the same level of regulation as the EU financial services sector. And this is because the UK has its own regulatory system, which is not fully aligned with the EU. And the EU is also concerned that the UK could use its regulatory autonomy to undercut the EU's financial services sector if they would allow them the access. As a result of these concerns, the EU has only granted UK financial services firms limited access to the single market under the TCA. For example, UK banks can no longer provide services to EU customers directly. Instead, they must either set up subsidiaries in the EU or partner with EU banks. The Trade and Cooperation Agreement, that is the TCA between the UK and the EU, includes a number of provisions on financial services still. However, the TCA does not provide UK financial services firms with the same level of access to the EU single market as they had before Brexit. But I can tell you some of the key provisions that are still there. The TCA provides for a limited degree of market access for UK financial services firms. For example, as I said earlier, the UK banks can no longer provide services to EU customers directly, and many have opened up subsidiaries to work on that, but it changes the game still. And the TCA also includes provisions on regulatory cooperation between the UK and the EU. And that is intended to help to ensure that the two sides' regulatory regimes remain aligned and reduce the risk of financial instability. But the UK is thinking about that. And the TCA also includes a dispute settlement mechanism for financial services. This is intended to resolve any disputes that may arise between the UK and the EU over the interpretation or implementation of the TCA. The TCA's provisions on financial services have been criticized by both the UK and the EU financial services industries. The UK financial services industry has argued that the TCA does not provide enough market access and that the regulatory cooperation provisions are too vague. Of course, they want more market access. And the EU financial services industry has argued that the TCA does not provide enough protection against regulatory divergence between the UK and the EU. So overall, the TCA's provisions on financial services are a compromise between the UK and the EU. And once again, the TCA does not provide UK financial services firms with the same level of access to the EU single market as they had before Brexit, but it does provide for some degree of market access and regulatory cooperation. We will see how the TCA's provisions on financial services will work in practice on the long term, but they are likely to have a significant impact on the UK and EU financial services industry in the years to come. But this loss of access to parts of the EU internal market is a major challenge for the UK banking sector. It has made it more difficult for UK banks to compete with EU banks, and it has increased the costs of doing business for UK banks in the EU. And if you want to know something more about Brexit or UK politics, the next video is right here in the end screen. I'll see you there. I'll be back.